Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, May 11th, 2011 is brought to you by Realtic. Alright, folks, we're going to get right into the charts today. Let's go right to it. We have a drastic fall in the markets, the bear flag playing out on many key stocks as well as the indexes. We have our cycle date from last week, which told us the market was going to be shortable on any bounce. That is the way it's been. And again, beautiful profits to those of you that have some shorts out there with us. Alright, first off, you have to discuss what's the cause of the downside. The cause of the downside is simple. I called a bottom on the dollar last week. We made great money on the bounce. We said the dollar is going to pull back for a couple days and then should go higher. That's exactly what happened. Today, the dollar is ripping higher. Take a look at the UUP here, folks. Skyrocketing. And this drastic move up in the dollar ETF here, which mirrors the dollar, is exactly why the markets collapsed intraday. If you match that drop up to this drop, or I should say the move up in the dollar to this drop in the markets, it is perfect. It matches 1-for-1, 100% the inverse to the dollar. Always remember that, guys. The market, you have to basically choose. Do you want the dollar to be stronger or do you want the markets to go up? Because they will not do it together. One is going one way, the other is going the other way, and they're going to be opposite. So you have to choose, and again, that's the political decision. That's what Bernanke has been deciding on over the last multi-year period, wanting a weaker dollar. That has propped the markets up. But again, how long can that last as QE2 comes to a close? Again, you're seeing a little bit of consolidation here, a little bit of a bounce on the spiders. Why is the market bouncing right now? Easy, guys. Easy answer. Because the dollar stopped going higher. Just that simple. And again, it is that simple, folks. As I zoom in on the dollar, notice the dollar makes a pivot high, starts to pull back a little bit. That's exactly why the markets have bounced here. All right, dollar weaker, any sort of weakness in the dollar, the markets will get a bounce. And again, right now, that move up coincides perfectly with the SPY. Massive drop intraday. Right now, we have the Dow Jones Industrial Average down 145 points. NASDAQ's down 30. S&P 500 down 16 on the day. All right, let's go back to the SPY. We'll talk about some levels intraday. The levels working perfectly again today. We talked about the gap down today below the 20 moving average. It flushes to the 50. You get a bounce here off the 50. Then it comes through the 50 to the next trend line, gets a small bounce. Then goes to the next trend line, gets another bounce. These are all the levels that were on the nightly video last night and in the research center yesterday. These levels are where they are. And again, you have to understand where they're coming from. This level right here, well, the 50 speaks for itself, 50 moving average intraday. But this white trend line, pivot lows from yesterday right here. All right, then it pierces and bounces, then goes through that. You get to this pink line. Where's that pink line coming from? Pivot top, 1, 2, pivot top. You're going to get a bounce there. Buy it. Then the market comes down, goes through that level, goes to the 200, gets a small bounce, flushes all the way through gap fill, coming all the way down to this pivot low, matching up right there, and gets a bounce. All right, and again, just know these levels, understand, and you can join the research center or the intraday stock chat by taking the 1-week free trial. It's 1-week free trial, no obligation. Just cancel before you're charged at the final day, the final night there, just before it rolls over into a real subscription if you don't like it. But again, we're pretty confident you will like it. And again, our members will speak volumes of our membership based on how much our retention rate is. Literally 90 to 100% retention rate. When a member comes in, they don't leave because the stuff we unveil to them, the calls we make are way too valuable. In fact, FF5V was a good one here, folks. Hit first target today. FF5V was a buy right here. I put out this alert on the hot chart and alert, which is part of the research center. It was a buy at 99.75. Triggers right here, and look at the move up. And again, that's even as the markets have been weak, and that's how good these calls are. It doesn't matter what the market does. I couldn't give a crap, frankly, what the markets are doing. If the chart is telling me something, it has a 90% chance of working out, and this is a great example. Now, at this point, traders have taken at least half off the table, if not all, with a break-even stop on anything remaining. It is going to be a profitable trade no matter what. All right? So again, let's go over the charts here. SPY, going back to that. This is the daily chart. Nice flush again, down $1.62. Dollar is probably starting to get a little bit as the markets are coming down in. Let's take a look at commodities. Commodities getting crushed. Look at this on SLV, guys. SLV down $3 today. Why is SLV getting crushed? Because the dollar is going higher. GLD getting crushed as well, down $1.80. Why? Because the dollar is going higher. USO down $1.62. This is a huge drop on oil again today, folks. We have seen so much volatility in the commodities lately. And why is oil dropping? Because the dollar is going up. It's all about the dollar. I mean, I've preached this to our research center guys and our chat guys, and it just continues to be such. If you want to know what the markets are doing, just look at the dollar, and whatever the dollar is doing, the markets will be doing the opposite. It's that simple. And again, why is that the case? I mean, why does the market track the dollar in the opposite direction? Well, black box trading programs are programmed that way. Why? Because individual companies which trade on the indexes are looked at as commodities. All right, just like gold and oil go the opposite way, because in terms of dollars they must appreciate or depreciate depending on which way the dollar is going, so do companies. A company, you look at a freestanding company, if the dollar is declining, that company technically is worth more in terms of dollars. And the same thing, if the dollar is gaining in strength, that company in terms of dollars is going to be worth less. It's the same thing as a commodity. It really is. Now, the only thing that changes that, how that stock trades, obviously, is earnings, which will affect it, and individual news. But if you don't have any news out there for one company, let's take you take a building and you put it on a piece of land, and that land is valued at, let's say, $100,000 with the building. If the dollar declines 25%, in basic terms, that value of that land and the house on that, the building on that, should go up by 25%. And it should now be $125,000 in value in base. The same thing goes with companies, and that's why you have these black box trading programs. The hedge funds do it, and that's exactly why Bernanke has wanted to kill the dollar as much as he has, because he wants to prop up the markets. When you prop up the markets, people feel like things are better because their 401ks go up, their IRAs go up, their investments go up. They go out and spend, hopefully generating a true recovery. I think that's a faulty perception. Why? Well, it does make the people that invest feel like there is a recovery, of course. But the problem is, as they're feeling like there's a recovery, gas and food and energy are all going up in value. That's sucking away those profits that they're making in the market. In addition, think about the whole middle and lower class where they don't have as much money. All those people without investments are getting royally kicked in the you-know-whats because of this policy. The weak dollar, think about what it's doing to people. If you don't have investments, if you are one of those Americans that do not have investments out there, or not money investments, and there's a lot, trust me, there's a lot of Americans out there that don't even have a 401k or any investments because they're just scraping by month to month, week to week, you are getting royally screwed by this policy. So again, it's the haves and the have-nots. That's how it's kind of been for a long time here, and that's the way it's most likely going to continue. Ultimately, I think it's up to us to just understand it. And frankly, ethically, I have an issue with it. But as a trader, I'm focusing in on making money on the charts, and that's what I'm doing. So again, as the market falls, as oil falls, as silver falls, as gold falls, I'm going to be there playing it and profiting from it, and again, doing what I do best. It's up to you guys to join us, taking the free trial and testing us out. All right, Amazon.com, which has been one of the strongest stocks of late, is selling off a little bit, but only $1.40. In terms of a $200 stock, that's really a minor move to the downside considering what the markets are dumping today. Apple Computer is down about $2.50 on the day. Nice drop on Apple. Apple still holding that in spirit of bullish pattern. But again, if it does not go soon, this Apple Computer will collapse here. And if it gets below the 20 and the 50 down here, I do think it goes all the way to the 200 moving average. So be aware of that, folks, that again, you are running the risk of, it is a nice in spirit of pattern, but any sort of move and it close below these two moving averages, expect it to collapse and collapse quickly. What other stocks are in motion? Obviously, the oil and commodity stocks are getting royally pillaged today. They're just getting crushed. Chevron down 255. And, I'll be honest with you guys. I'm upset about this. Why? Because in the nightly video yesterday and to my members yesterday, I said, guys, this is a great bear flag forming on Chevron and Exxon. Take a look at Exxon here. XOM. Great in spirit of bear flag forming. You have the down move and then the up move, sideways move. That's beautiful bullish flag consolidation pattern going on. This is going to drop. I said, you know what? Let's wait to see if it hits the 50 or the 20 right in here, and then let's short this thing. And the same thing I said for Chevron. Let's go back to my real tick chart on Chevron. Same thing. Gets right up in this range, right here between these two moving averages or right into those moving averages. I said short these things because they're going to go down. Well, you know what? It didn't quite get there. And that's the breaks of the game. That's what happens as a trader. You set yourself up for beautiful patterns. Sometimes they don't work out. That's fine. You know what? I'm still holding the SDS, folks, on the long side, which is 2 times short the S&P 500, and I'm making money there. So as long as you got some exposure, who cares? You're going to miss trades along the way. That's just the nature of the game. And the faster you understand that, the faster you move on to the next trade and make more money. Small caps are ripping today, regardless of the market. OXGN. Take a look at this, guys. OXGN. Holy cow. In fact, I think this is probably the top on this. The reason why is because if you take this pivot top and just drag it across, you are now really right into this area. Take these pivot tops from early in the year and just drag it right across. See this little pivot here from here? That's right into that area. So my guess is OXGN's topping out. But this stock was literally a week and a half ago, 2 weeks ago, $1.70. It's now $5.25. Really no major news on this either. It was just a small cap biotech with a low float. And it just started to get that bullish move in it. And it just ripped and ripped and ripped. Other small cap stocks to watch. What else is out there that's moving? Take a look at QTWW. Look at this move. This stock had been punished. Unbelievable move to the upside, folks. You don't see this every day, and it's amazing that the market's as weak as it is and some of these small caps are still running. I'll tell you a couple small caps I like in the final couple minutes of this video. EPCT, it's a biotech. Epicept Corp. I love, if you zoom out, look at this consolidation pattern. The up move here, long basic consolidation. This is only a $30 million or $35 million market cap play. If this starts to run, this is where it's heading. It's literally heading back to a buck, in my opinion, if it starts to go. And what you want to see is a continued confirmation move above the moving averages. If I zoom in, you can see it clearly. You've never really confirmed above the 200 here. You got to confirm above all three, but then it's like a lightning switch, and it should blast off. This is up about 10%, a little less than 10% today. But again, I have to say, I do think this chart is a beautiful chart setup because of that long consolidation base. Look at that up move, long consolidation right there. A thing of beauty. All right, what else is out there that looks good? BSPM is a little bit on the high-risk side, but again, dead lows to the chart on the small cap side. If it can get through this 20 and close above this 20, I do think it makes a move all the way to the 50 moving average, which would be at about $1.96 or so, $2. If it gets through that, it could easily go to about $2.50, which is the ultimate target on this one, and that would be about a dollar move up from where it currently sits. Wouldn't be surprised to make a move. Now, again, why is it high risk? Well, it's a Chinese stock, and a lot of these Chinese small caps have been halted of late over the last couple months because of fraudulent claims in terms of contracts. A lot have said they've got contracts. They really didn't have the contracts, and it made it look bigger. But, again, this one's been beaten to a pulp anyways, regardless, even though there's been no allegations on it. Could there be them? Yeah, of course. It's always a risk. But based on how it's trading down here, how cheap it is, it almost looks attractive to me at these levels. So those are two stocks. Another biotech I love is ABIO. This had a great news on a big deal with a big pharma company. It spikes up to 320, and now it's consolidated back to the pre-run levels here. It could take a little while, but ultimately I think this is making a bottom down in this range. Anywhere down here, this is your bottom level on ABIO, and I think, again, eventually it will head back to $2.50 to $3. So those are just some ideas there, throwing them out to you guys out there. And again, if we go back to the SPY, let's take a quick gander at this. And again, this SPY is just chopping sideways. What is this telling us? The choppy movement sideways? Most likely that the dollar is going sideways. All right, dollar going sideways, market goes sideways. Dollar goes up like it did, market goes down. So the dollar went like this, remember? Went like that, markets go down. Now we're going sideways on the dollar, therefore the markets are going sideways. Just that simple, guys. I know it seems crazy that the markets essentially are just moving inverse to the dollar, but that's the way it's been for literally a year now, if not more. And again, it's all about these black box trading programs. It's all about the thought of a company individually as being a commodity, which again, if the dollar decreases in value, therefore it should increase. And that's why the markets are up 100% off their lows, because the dollar has had a massive drop over the last year or two or a couple years, and that's where we are, all right? So in any case, we'll continue to follow the markets, but again, I encourage you to take that free trial of the research center. The trades are being put out. The profits are being taken. Can't hurt, right? It's a free trial. What's the worst thing that's going to happen? You're not going to like it and cancel? Okay, so do it. No big deal. No skin off our backs. Again, we believe that if you join us, you will stay, probably for life, because it's going to make you that much money. All right, guys, have a great afternoon, great evening. As always, come join us here at InTheMoneyStocks.com.